Hello there, traders. Welcome to today's live stream. I didn't do a live stream on Tuesday. It was bank holiday on the Monday, so the usual currency strength weakness analysis that I do was uploaded on Tuesday. So yeah, I wasn't around for a stream. I won't be around for a stream next week either, both Tuesday and Thursday. I'm on holiday next week, so won't be any live streams next week. And hopefully then we can come back into sort of middle or at least second week in September, and hopefully there's been some decent movements in the market. But we're going to discuss some interesting topics today. We obviously discuss some of the fundamentals that have happened. But before I do that, welcome everybody. Hi, Hami. Hope you're doing well. Bruce as well. Welcome. Vincent. Hope you're doing really well. Ratish as well. Welcome to the live stream, guys. Let me know what you guys have been up to. CG as well. Welcome. Let me know what you guys have been up to. Any kind of good trades you've had recently. Obviously, I haven't been live streaming for a while, so let me know how the past sort of week's gone for you. I'm going to show you the currency strength meter as well. We're going to have a look at how that has performed this week, and hopefully hopefully we can see some good opportunities within the market for the next couple of days. It's going to be super interesting. But yeah, I'm going to go over some of the usual fundamentals in the market first. Obviously, we've had some decent data drops, so I want to talk on those, and then we'll go from there. So let's bring in the data for this week. I'm just going to increase the zoom on this so we can see what we're actually talking about. And it's been a really interesting week so far, right? It's been a really interesting week, especially if you're into the data like I am. It's been a very, very interesting week. So let me just go up to this week and see where we're at the moment, and then we'll go through. So Monday, Tuesday wasn't really a lot going on. There wasn't really a lot going on at all. One of the things that I did like to see, or that did interest me, was the BOJ core CPI year on year coming in at 1.8%. But I'm really focusing on what Tokyo CPI is doing in Japan, which comes out tomorrow. The only other good data we had really out the US on Tuesday was the CB Consumer Confidence Survey. And the CB Consumer Confidence came in at 103.3, up from the revised 101.9. So that's actually very interesting in terms of, obviously, we've seen a lot of recession talk recently. And CB Consumer Confidence is basically telling us that consumers are still confident that in sort of spending, essentially. And that was just that's an interesting kind of concept to have a look at, considering where equities are and things like that. CPI year on year up down to 3.5% in Australia, down from 3.8%, which is a little bit of positivity over there. Australian dollar still fairly strong at the moment, and that has been driven by the ANZ business confidence. So ANZ is a bank in Australia and New Zealand, mainly in New Zealand, but it's called Australia New Zealand, and they send out a survey to businesses in New Zealand and get some feedback. And it was the highest level that they've had for over a decade. So Australia and New Zealand having a decent bit of performance because of that as well. Plus the market switching into the kind of risk on has helped. And then today we've had a little bit of interesting data. So still not had the German CPI out. It should have come out by now, I think. But we haven't seen that yet. It hasn't updated here on Forex Factory. So maybe we haven't seen it. Let me just do a little refresh. Yeah, there we go. It's going to say it should be there. Minus 0.1%. So pretty good in terms of CPI's come down. Great. But Germany's in trouble, especially from the manufacturing side. So they need to be supported in some way, shape or form. What else have we got? Big data today, really speaking. GDP quarter on quarter in America grew to 3%. So it's still showing some growth there. So we've got some really interesting conflicting data still, haven't we? And Now, if you think about what's going on in America, they're going to cut rates right now. What does cutting rates do? It stimulates the market, okay? And that's what we should be expecting, some kind of stimulation. But I'm going to show you some charts in a minute that might get you thinking of what could happen next. Unemployment claims 231, so nothing really surprising there for us. So again, bit of a lackluster few events in the market at the moment in terms of data. What I'm looking at going into Friday is Tokyo core CPI year on year, expecting some opportunities around that. If we do see very strong positivity in Tokyo core CPI, then I'm expecting the BOJ to think about hiking rates again. So I'll be watching that very closely. Unemployment rate sitting at 2.5% as well. But big data coming into tomorrow is just the CPI flash estimate year on year in Europe, core PCE in the US, and GDP in Canada. But really speaking, core PCE price index is going to be watched quite closely, even though the Fed have kind of started to move away a little bit from the inflation side of things. They're more into sort of the labor market at the moment and the performance of the labor market. Still going to be very important to watch out for. And then Saturday you got manufacturing PMI, so that's going to be interesting out of China. So a little bit of movement over the weekend perhaps. So yeah, that's it really. Not a lot in terms of market moving data, but still interesting data nonetheless. I can see some messages, so I'm going to go through those. Vincent, I've placed a short on Kiwi yen at 91.2. Stop loss 91.27. Very interesting there. I like the idea of buying yen, but I'm waiting a little bit first before we do that. I'm going to show you why, but we'll have a little look at some currency strength and weakness and stuff as well. This was some data that we discussed on pound yesterday in a video. If you didn't see potential pound reversal video that I posted yesterday, this was something that I was talking about potentially happening here. We can see that the market has rallied a little bit. Well, obviously it's rallied quite substantially, which is very unusual for August, and we've seen a little bit of a head and shoulders play here now. So that's something to have a look at, which I'll talk about in a moment. But yeah, you've placed a Kiwi yen short. Let's have a quick look at that then before we move on into our major currency pairs. So, and a 15-minute time frame short as well. Let's have a look. Let's have a look at the weekly. So the weekly is still in that sort of pullback phase there. So wouldn't necessarily be short this market right now. I can see maybe why you're looking to get short, because we've come up into sort of this level of resistance area in here, I guess, which could be a good point of resistance. If we take a look at some volume profile through there, it's kind of like the area where you've got this kind of edge of the ledge sort of zone of resistance. Honestly, Kiwi's not on my list to short, right? Kiwi's on my list to buy, so I would be buying the Kiwi dollar right now. So again, I always try and come back to like, why do you want to be involved with short Kiwi yen right now? What are the factors that are driving that, right? What are the factors that are driving it? So always try and think of the WCS method, right? Why do you think the market's going to do something, right? So why? Okay. So why do you think Kiwi yen should be going lower, essentially? Why do you think that's the case? Is it something fundamental? Is it something that you like on the yen side? For me, if we just bring in currency strength meter, the New Zealand dollar I have as one of the most positive currencies last week. So I wanted to buy Kiwi this week. Japanese yen is still a strong currency as well. So although we're seeing it kind of pull back across the board, I still feel like there's a good opportunity on the yen, but I just don't like it right now. But I'm going to explain why in a moment. But yeah, so if anything, I'd have been looking to buy Kiwi against the likes of the euro, which is -3, maybe against CAD as well. Although I like CAD longs, CAD could be one to kind of look at in terms of currency strength and weakness at the moment. Even potentially the Swiss franc, which has seen a little bit of a short-term reversal. So if we go take a look at a couple of those charts instead, you may have just felt that you might have been easier going over to something else. One of those being Euro Kiwi. Okay, and if we have a little look at Euro Kiwi's performance over the past week, you know, we're on Thursday now, so I'm going to take Thursday's current low here. I'm just going to go to Monday's high, right? That's done 370 pips to the downside. So that would be where I would have been buying Kiwi this week. I would have been buying Kiwi against the euro. And you've got your conditions here met as well. So why do you want to be short this market? You've got Kiwi strength, right? And you've got euro weakness. So you want to be short. Conditions, are they meeting that short criteria? Well, you've got a break of trend line support. You've got the market that's made a lower high, now making a lower low. So for me, this would have been strong indication of moving lower. In fact, that zone there would have been a really nice target for Euro Kiwi to the downside. So then I would have tried to apply some kind of trading strategy on it. If I just go and bring on some session breaks here, I'd be looking at sort of patterns, triangle patterns, or I'd be looking for some kind of, you know, breaks in trend. I can see here on Monday, you actually had a little bit of a bullish day. Tuesday broke that down. If I just bring on a 50 moving average on this hourly time frame, right, you would have had a good couple of opportunities to try and get short in this market, you know, break out here and a retest of the 50. But look at that sort of move that's happened. You know, I would have been looking at something like that instead, Vincent. I think, you know, I like your theory, because I think that you're trying to short Kiwi yen because of the yen and the idea that the yen is bullish, but which I agree with. But we need to wait for some catalysts first, okay? And I'm going to talk about that very, very shortly. But just kind of covering off the currency strength meter for this week, Euro Kiwi was one to watch. Another one I really liked was Euro Pound in the short-term move to the downside this week. That has moved lower. If we take in Monday's high down to current lows, 75 pips to the downside there on Euro Pound. What else was there? There's quite a few that I like this week. Pound US dollar bullish, but I quite like a reversal situation there. So that should have been a reversal. But yeah, Kiwi dollar, I liked a bit of bullishness in. And what else did I like? Pound pair should have been reversals this week. Yeah, euro yen, Kiwi CAD even, or Kiwi Swiss could have been a good couple of markets to have a little look at. I haven't looked at them personally, but although I've monitored them, I've not took any trades on Kiwi CAD because I'm buying CAD elsewhere. But yeah, Monday's low, that's 116 pips to the upside. Kiwi Swiss is actually starting to play out from the currency strength and weakness analysis we were discussing at the start of the week, where we discussed the potential breakout of this triangle pattern. So if we get a daily close like this on Kiwi Swiss, it could be an idea to see continuations higher in the short term on Kiwi Swiss there. So that's something to have a little look at. But this one's gone pretty sideways. If I take the low to the high at the moment, it's only up 58 pips, so nothing major there for Kiwi Swiss. But yeah, let's get into the nitty gritty then. What's going on in the markets? Well, obviously the dollar's been very bearish, and we've come into a very strong level of support on the weekly chart. And this is what we have to expect after some decent moves to the downside. Daniel, I've just blown my account. That is not good news, Daniel. I hope you're okay for one. Hopefully you can try and get back on your feet there. But if you are trying to make quick money in this market, do not do it. It'll lead you to blown accounts. You should go and trade on a demo for a bit. Think about this more long term. Think about it more long term. Ratish, pound reversing, looks like, yeah. So okay, let's dive into this a little bit. Let's dive into it a little bit. I don't want to keep jumping around today. Someone set me some notes, so I'm going to set some notes to everybody. This is how the program of the show is going to go today. I don't want to keep jumping around. So we're going to talk about the pound, why I think it's a reversal. Okay. I'm then going to show you some really interesting insights on the S&P 500, why I think you could be expecting something interesting to happen. I'm going to put reversal there as well. And I'm also going to talk about yen. Okay, so I'm going to post that into the chat. Keep me on topic, guys. Right, this is what we're going to be talking about today. Also, if you find this information that I'm about to show you really useful, then feel free to hit that like button. It is free and it lets me know that you're enjoying the content. So let's talk about pound. Okay, let's talk about pound and why I think this could be an interesting area to look for a reversal in the market. Now let's have a look at the dynamics of the pound so far over this year. It's been really good, right, in terms of strength and weakness. Pound has had a very successful year against the US dollar, largely driven because of the US dollar weakness, but also the obviously we had the election in the UK and that brought a little bit of political stability to the UK. We've also seen some really positive data out of the UK, although there's some worrying labour market statistics. I think that the data on whole has been good for the UK, so positivity coming out there. But yeah, this extended move here in August isn't actually typical of what should happen through August. And what I'm talking about in that sense is seasonal analysis. Okay, and if I just bring it in, let me just type in British pound sterling. Let's have a little look at our seasonal charts. Okay, so using markets made clear here. Now, if we take a look at how the market has been performing in regards to its typical average. Okay, so the orange line is the 20-year average for the Great British Pound. This is the futures chart, which is just the reflection of the spot price, okay, and the CFD price that we look at. But 20 years, okay, usually in August we see some downside. Okay, and you can see that this is that period here. August, typically we would see some downside through to the end of September with a potential rebound in August. Okay, October. However, we haven't had that. Okay, the only times it's kind of come in with the 20-year correlation or the 20-year seasonals was a little bit through July, where we had a very strong correlation for a very short period of time. But we have a look at the correlation here. Over 48 years, we've only got a 44% correlation with current year's price. Over 20 years, we've actually got a minus 46% correlation. And then over an election year, which is this year in the US, we've got minus 29%. So really speaking, it's not following its seasonal patterns, right? Now, a cool thing about this tool is I can change the narrative that we look at, right? So there's this little button here called what if. So if I go and click what if, and I can just go, what if August is positive? Okay, and what it'll do is it will calculate all the years or the custom years where August has been bullish, okay, and then typically what happens after the fact. So if I just take off the 20 years now, you can see now with the custom seasonal chart, we have a 78% correlation with current price and our custom price, okay, and that is using 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 years. Okay, so this is why I'm very interested in this correlation, right? Because for one, it's a strong correlation and it's backed by a significant amount of years, right? Now, typically there is a seasonal period for the pound. In September, it only has a 61% success rate though. But I'm going to talk about some other features as well. But there's a potential here for this market to start rolling over, okay, and potentially. Okay, now it's going to have to take the dollar to get stronger as well. And we know the dollar's a little bit weaker at the minute. But, you know, looking at the data that we've seen coming into towards the end of this week, dollar's starting to get some more positive data. So we could start to see some interesting developments here when it comes to pound. Okay, so I'm basing this a lot off this seasonal chart because of what's happened throughout August. We can use another thing as well with markets made clear, which I like, called True Path. And if you just click on calculate here, it's then going to give you the closest sort of correlation years to this year, but there's not as much data. But still, typically there's a top in September or the end of August, start of September, with a bit of a move to the downside. So just kind of reflecting that with current price. Look, the market's moved higher, very strong couple of weeks that we've had in the market after breaking low, after breaking out of the sort of bearish trend here. Are we going to see a short-term reversal, perhaps back down towards the 1.3? That's what I'm kind of looking for here on pound right now. Just looking for maybe price going to push back towards this 1.3 level, these weekly previous highs. That could be a strong level of support if we see the seasonal pattern play out. Sometimes the seasonal can see price sort of come back a little bit deeper, so we might even be able to look for the 129s, but I think that's a bit of a stretch. Personally, I think that's a bit of a stretch. So I just thought I'd bring that to the table first, why I like that kind of pound opportunity there. You have a little look at the 4-hour time frame. Just going to take off this session breaks here. We can see that the market has formed a very sort of familiar pattern to us, which is that head and shoulders pattern, where you've got the left shoulder, the head, and then the right shoulder. And you can see that price come up into that left shoulder sort of zone there, and we have rejected for now. So we'll see if we can hold and sustain below this area and see if it can push lower back towards maybe this secondary trend line support. Okay, so that's my first kind of market that I quite like the look of at the moment. And again, how can we expand this out, right? So we're looking at pound futures there, which kind of reflects pound US dollar. Could we go and find currencies that are strong that we could go and trade a little bit of pound weakness against, right? So maybe pound yen shorts could be something useful. I haven't actually looked at pound yen, so I don't know what pound yen is even doing at the moment. But it could be something to consider going forward. Have a little look at this weekly chart here. Not really made much ground to the upside, have we, on pound yen? I quite like the idea of pound kiwi short. Okay, so this market has already continued to kind of drive lower at the moment. So what I'd be looking for, if I just go to the weekly chart, it's just looking for where that sort of demand sits on a weekly scale. So maybe somewhere in here where we've had that sort of breakout of volume. So this one might be quite close to the zone of interest. You know, if we look at it look at that consolidation before the breakout. So what I would want to see maybe is a bit more of a developed pullback here, just to give us an opportunity to trade into that zone. So that's the way we can kind of think about it. We can go look at currencies that are strong and try and trade it against it. Pound Aussie also looking a little stronger at the moment. And if we go up into the weekly chart, you can see if we were to break out of this consolidation, we might even trade down towards the 1.9s again or something like that. So yeah, definitely something to remain interested in is pound at the moment. Will we get the seasonal play to the downside? If we do, can we go try and trade it against currencies that are strong in order for us to try and profit from it, essentially? Vincent, since your cut report on dollar CAD, it's all downside. Yeah, so I actually got out of this just above the 136 handle, and boy, do I regret it, you know. Basically got short at 138.60s, took myself out at 136.20s, or might have even been 30s. I've not got my trading terminal open at the moment. And look, we've kind of traveled another sort of 200 pips lower. So yeah, it could have been a 400, 500 pip trade, I think, if I'm saying that correct. 38.60s ended up coming out with around 240 pips. Yeah, about 420 pips I would have been able to try and take out of this at the moment. But yeah, we got out at 136. But this is something we did speak about for a while. We did talk about the Commitment of Traders report and how it was showing us. Let me actually bring it up. There are multiple ways to get cut data. Cut data is actually free. I use Markets Made Clear because it puts it in a very good way in terms of how they report the data. So if I go to CAD, but this is not free. This is not free. You have to pay for this service. If you want free cut data, you can go to free cut reports, I think, if that's what their website's called. Here we go, cutreports.com. This is free, and what they do is they update the sort of simplified version, detailed version. So what you can do is click onto simplified, come down to this little area here, so you can see Forex majors, cut reports. So this is going to include the dollar index, the euro, Oz, CAD, yen, Swiss, pound, and Kiwi. And basically, it looks hard to read, but it's quite simple to read at the same time. You want to be looking at the sort of when anything's sort of dark red or strong green. That basically means that the non-commercials are at levels of extreme. So at the moment, the long contracts for non-commercials for the US dollar index are at extreme levels, according to this. Let me just kind of show you that just down through here. There is a paid version of this as well, so you can only kind of see this. If you want to download the reports for yourself, if you go to the cftc.gov website and you come over to market data and economic analysis, you can come to Commitment of Trader reports. If you want to actually download it, you can come to historical compressed over here, I believe. Let's see if it'll take me to that. And you can see they've got all the Excel files here. You need to come down to traders in financial futures. So this one here, traders in financial futures, futures only reports. And you can actually download the Excel files yourself, which I have done as well. Because I'm thinking about building one of my own cut indicators at the moment. So I'll keep you updated on that, but I'm working on that at the moment, and I've downloaded all this data in here. Obviously there's loads of other reports that you can have a little look at, trying to have a look at and see if they're important to you. But traders in financial futures, they're more sort of what you want to be looking at there. But it's absolutely free on here to download. They release it every Friday. So they get the reports on Tuesday or Wednesday, and then they report it to the public on Friday, and you can come and have a little look at when this is updated. So you got those, but then, I use a platform like Markets Made Clear. Now, what we were looking at on the CAD futures at the time was the fact that we were at the sort of weekly range lows here. You could see that the long contracts from the commercials were at all-time highs, pretty much matching what we saw recently. And that was our sort of idea of being a buyer of CAD. And you can see, this has played out really nicely so far. We're seeing the contracts dip now because that's naturally what happens, because the commercials will be in the business of hedging. So as price rises, they'll be looking to sell, essentially, trying to hedge those positions within the markets. But then you've got the non-commercials who are traders, and you can see they're starting to get rid of their sort of short contracts here on CAD. So what does that tell you? Well, it tells me in a way that they're starting to sort of offload that sort of short positioning that they've held. So they might start to consider buying CAD. Now, that's what we'd really want to fuel the CAD strength. I want to see these contracts here start moving up and these contracts continue to move down. Okay, because that will give you a little bit of fuel to kind of see the opportunity there. You know, when you start to see the non-comms shorting heavily and then the longs really start to sort of move away, if you have a look at how that impacts price, that's not the straightest line there, but you can see we pretty much move lower. So I don't really want to see essentially that. I want to see these two lines start to sort of converge back towards each other for that continued CAD strength. But yeah, it was a good shout that was, Vincent. You know, hopefully that does continue. Not really seeing much more on the COT front. Obviously, yen is suggesting that we short Japanese yen, but I don't want to do that, and I'm going to show you why in a moment. MJ Forex, please, which platform can I be getting COT? So yeah, I've just showed you kind of 3 ways you can get it. You can also go to barchart.com. They have it for free, and it looks quite similar to this, but it's a bit more basic. Yeah, Ratish, I love following the dollar CAD weekly chart, often respects the range. Yeah, exactly what we played out there. Markets mode clear, some good tools. Yeah, it's definitely, it's one of the better markets, better tools out there, I would say. I had the actual pleasure of sitting down with Ray yesterday and having a chat with him. So yeah, it was good to get some insights on the platform. So yeah, very interesting reports at the moment. Another one is gold. Gold shorts coming in. I don't think this is ready yet. Although I feel like a short-term short could come through, I'm just kind of focused in on the short contracts from the commercials, and they're not really at levels I want them to be at yet. You know, even if I look at the long contracts from the non-comms, although they are getting to quite an interesting point, you know, could we see them get a little bit higher? Perhaps. You know, this seems to be a good point though in the past for non-comms. So I'm on the edge with gold. I'm on the edge. Let's have a little look at the seasonal on gold. Let's get rid of this. I know I've said I won't go off topic, and I've gone off topic already. Let me just stick to dollar CAD as well. Look at this chart that I found. So this is a Forex sentiment indicator on my FX book, and what I thought was interesting. So basically, they've got Forex sentiment. You can go by lot size, or you can go from positions. I went to positions and a daily chart, and I've just kind of opened this up a little bit. I think it's a daily chart anyway. Yeah, daily chart. And what you typically see when it comes to retail is they start to go short in a market that's going long, and then they go long in a market that's going short. And that's exactly what you're seeing here, right? You got that sort of upward move there in short positions. Okay, so short positions, market goes up, but then they come to an extreme level again, very extreme, and then that flips over. What happens to the price? They start exiting short positions, start going long because they think that the market is now going long, and you know, they start adding in aggressive longs, and look what's happened. Prices has moved lower. What I'm interested in is, if do they start bailing these longs, will that influence a little bit of dollar CAD upside? That's what I'm kind of interested in at the moment. But again, just another chart for you to kind of think about when you're doing your analysis. I'll put that over there for a sec. And then just to add another little bit of weight behind it as well. Look at this. This is a seasonal chart, custom seasonal chart that I've done for CAD. And typically we get a very strong performance between August 20th and September the 2nd. I mean, look at the low it called, right? You know, usually you get a low on July 31st. We had a low on August 2nd on the CAD futures, which is inverse dollar CAD. So it would have been a top on dollar CAD. And look at that move there. And it can be sustained for a little while, which makes me think that we might be seeing a move back towards the range lows on dollar CAD in the short term. So yeah, lots to kind of digest there, if we think about it. So you've got seasonal plays showing some CAD strength. We had the commitment to trader reports showing CAD strength. We've got retail sentiment heavily long on CAD, which is usually a bearish signal on dollar CAD, which is again CAD strength. And yeah, so a lot of biases around CAD at the moment. So I do like that sort of market. Let's talk a little bit about the S&P 500. Let's talk a little bit about the S&P 500 because we are approaching all-time highs again. If we look at the NASDAQ, we're a similar place. Dow, similar place as well. But we are starting to see a bit of a move higher here in the S&P 500. Now, what I want to do and what I want to show you is the performance of S&P 500, because there's been a lot of talk of recession lately, right? A lot of talk of recession, a lot of talk of I guess interest rates being cut, so we're going to see a bull rally and things like that as well. So you've got like the two sides of the coin. I had this bullish rebound back recently at the beginning of August when we had a significant spike in the VIX, in the volatility index, and we saw prices move higher. Now I'm going to bring on a chart here that I find very interesting. So I'm going to go to indexes here, and I'm going to go to the S&P 500. Right, and I'm going to bring this down. Okay. So this is the E-minis. It's just a futures contract of the S&P 500. Okay, the stock index. Now, again, look at the correlation on all years with current price. It's not very good. You've got 20% compared with 44 years. You've got 0% correlation over the past 20 years, minus 7% in an election year, which is very interesting, right? So what I'm going to do is I'm going to take off the 20-year average. Okay, we're going to build some custom ones here. Now, the first one I'm going to do is TruePath. Okay, we're going to have a look at TruePath and what does TruePath typically say in this time of year. Well, TruePath actually says that we usually get a little bit of a bottom around August 8th. Look at that move there that we had. So it has an 86% correlation between current price and this custom thing. The only problem I've got with this is that it's got 3 years within it. So I'd like to see some more years there. But what we can do again is if we go, look, what was the most sort of eye-catching move was July to August, right? So I'm going to go to July is negative. I'm going to see how this changes. Okay, I'm going to see how this changes. And you can say, okay, well, you've got a 47% correlation there, so not very good. If August is positive, what do we typically see as well? Boom. This is the one I like. This is the one I like. Although the custom's only 9%, it's got some interesting figures here. But what I'm really going to show you is, I'm going to go to none here, and I'm bring up 2007. Okay. Now, I don't know about you, but this to me is quite interesting. Okay, so we've got 2007 within this little area here, and the similarities between 2007 and the stock market right now is very, very interesting. Very, very interesting. You know, if I go to, what I'll do is we'll go side by side. Yeah, okay. I'll go back to a daily chart. Let's go to, and we'll have 2024's performance on the left-hand side here. You know, Jordan showed me this morning, and I was really interested in this. Let's go to, I'm going to get rid of the drawings, and I'm going to go back to 2007. Now, obviously, we all know what happened in 2008. But there's some similar, I can't even get there. 2007. Why can't I get there? Go to a weekly chart. Can I get there on a weekly chart? You might go for the data. Is it what? No, we need more data than that. Trading view. Sucking right now. S&P. Let's see how many years you get on this one. Okay, right, cool. SPX. I want to go to a daily chart. I'm going to go to a daily chart, and I'm going to go back to 2007. And I'm just showing you this because there is some eerie similarities with what's going on between price action across the board and 2007. Okay, so this is 2007. Okay, and this is, where's August 28th, 29th? So August 28th, 29th is here, right? And look at 2024 next to it. Okay, tell me that doesn't look similar, right? Now, obviously, we know what happened in 2008. We had this big bear market for like, you know, a couple of years from sort of end of September, end of 07 down to the sort of middle of 09. We had that sort of market crash there. But that looks very, very similar. Now, there are some other similarities between 2007 as well than 2024. One of those things was it was going into an election year. There was inflation situations going on. There was a cut of interest rates in September. So, yeah, I just found that this was a very eerie chart to have a look at because we're starting to see some very strong similarities between the 07 year and 2024. So just thought I'd bring this to your attention because this is something I've been looking at for the past couple of weeks, especially when it comes to things like yen futures as well. If you have a little look at dollar yen, you know, Japan have been through a couple of hiking cycles. One of those was in 07 as well, when there were hiking rates. And that's something I like to try and look for. You know, when I'm thinking about markets, I think, well, if they're going to be hiking interest rates, when have they done that in the past, right? And if they've done it in the past, what's happened to price? Okay, so if I just bring on the Japanese interest rate, I'm just going to go to max. You can see that here in 2007, between sort of June of 2006 and March 2007, they hiked interest rates from 0% up to 0.5% and held them for a while until obviously we had the crash of 08, 09, and then they started to bring interest rates down. But that's quite interesting to see, that little bit of an upward move there. And that's kind of what we're getting at the moment. Okay, so again, this is what I'm saying. We've got very strong similarities with the Japanese yen as well. Obviously, Japanese yen being a safe haven currency. So we have a little look at 07. What's going on in sort of 07? Well, we had that similar sort of pattern, right? Market was involved with the carry trade, right? We had the involvement of the carry trade. Let me just go to current price now. Involvement of the carry trade, and then look at that big unraveling of the carry. Yen got stronger. Market completely sort of dropped from. I mean, don't get me wrong. It was a lot lower. The price was back in 07, but it was at 123s, and we ended up falling all the way down into the sort of 77s. Which again, very, very interesting price action to me. When you're looking at and comparing it against, I'm just going to go to the weekly chart and just kind of bring 07 in here. You know, look at the sort of similarities between the price action. Again, I'm just going to go weekly chart here. I'm just going to delete those drawing tools. And, you know, if I zoom out a little bit, you can kind of see very similar upward pattern, very similar upward pattern. Yeah, are we in this phase here right now? Right, are we in that phase there right now? That's scarily similar, right? Am I making this up? Let me know in the chat. What do you think? Am I making this up? Is this something I've just made up in my head, or do you think I'm onto something here? Let's bring back. We'll go to major currencies as well. We'll go Japanese yen. Okay. I'll take off the current year. Load more years. 2007. look at that. 86% correlation between 07 and the current year. So I'm definitely seeing something here. I mean, look at that low that it even looks at, you know, points out there's a potential long on yen on July 10th. And I mean, it's nailed it absolutely perfectly there, which is interesting. But this is why I don't think, or this is why I think yen strength is there. But is it there yet in terms of an opportunity, a tradable opportunity? I don't know. We've had this kind of, you know, sort of pullback move, very similar to what we've had here, right? So could we be going sideways a little bit, even a little bit of weakness coming in, maybe panic over, and then it gets into September with the Fed, they cut interest rates, and then does it go pandemonium with yen strength? You know, that's what I'm kind of looking at in the market. That's what I'm kind of thinking about at the moment. So yeah, that covers all my bases really. We've kind of talked about a lot already. This is what's been going on in my head when I haven't been talking to you guys on the stream. I've been looking at sort of how the market is faring up from a seasonal point of view. Again, I like to do seasonal analysis at the end of the month. So, you know, I like to just have a little play around. And Markets Made. Oh, sorry, I punched the mic there. Markets Made Clears tool is just brilliant for doing that. It just allows you to kind of play around with different years and have a look at, you know, the correlations there, strong correlations with the current year and this year. Or custom years, which I just find fascinating to do. But yeah, interesting markets coming up, I think. And it's all going to be driven by data. It's all going to be driven by data. It's all going to be driven by what the institutions are doing. So when I look at the Japanese yen now, like today, what am I thinking? I'm thinking we're going to get a short-term pullback, okay? And I still think this. I still think that we're going to get a little bit of a sideways market, maybe even a breach of this high, and then maybe we get the downside. Okay, 128s could be something to look out for in the near future. Now, I did like dollar yen over the past kind of couple of weeks. I actually did take a short on this, and after we broke down in this little area here, I had a look at a short trade on dollar yen on a break of this pattern. And if you go to the hourly chart, I basically looked at getting short on the breakout, which was around 146.17. Ended up coming out just at these lows here, so I didn't actually take a lot out of this move after it kind of come back up and tested the higher areas and then dropped again. But 144 was the sort of area I was looking at in terms of short into. I like 144 because if you go up to your weekly chart, it's kind of the sort of previous week's lows. So that's why I was kind of interested in doing that. Also on the daily chart here, you can see it's kind of like the close back on the 5th of August. So I thought that would be significant. So yeah, little move there. Ratish, do you find the IG market sentiment contrarian view useful? Yes, I do. Obviously, again, you have to take all these tools that you use, and when you're like forming a bias and you're forming a Y in the market, that's why I have a 3-step method, right? Because you can't just take a piece of information and go, yeah, great, I'm going to go in on this. I'm going to get aggressive. I'm going to start, you know, buying and selling this currency or this equity or this commodity because of this. No, you can't do that. You have to have some kind of method. But I do find that it's interesting to see that the crowd often go the wrong way in the markets, which is interesting. And let's say, for instance, you know, for the dollar CAD opportunity that we took short from the 139s, to see that they were heavily long into that level would add a lot of weight at that point to me. You know, Larry Williams, arguably one of the greatest traders of all time, in the commitment of trader report data, you get the non-reportables, which are typically wrong when it comes to trading. He built a whole indicator around them being wrong, and he made a lot of money doing that. And he used to do the opposite of what the non-reportables would do, because essentially the non-reportables are big enough to have to report to the CME, or the CFTC, but they're not right. They're not always right. They're only usually right in some really rare commodities like orange juice and hogs and stuff, cattle. So I find that interesting. But yeah, I like it. I like it useful. I find it useful. I found this one on my FX book, which I thought was useful as well. So if you want to check that out, go and check that out. They've got a lot of tools over there, correlation tools and stuff that I like to use. But yeah, for me, that's why I use that 3-step method. Why do I want to be in a market in the first place? What are the conditions around it? Okay, can I take a strategy to it, or can I at least find some kind of strategy that would work in those type of market environments that I'm expecting? You know, like with dollar CAD. If we just flip over to dollar CAD, you know, this was our sort of idea to be short from here, targeting at that 136, right? So where do the conditions change really for the market to start moving lower? Well, if I draw a trend line up here and we go to a 4-hour chart, I like to look for breakdowns in sort of trend first, and then I start to look for kind of, you know, strategies and things. So for me, we had this like double top break of the neckline there. Okay, so this was where I really started to get interesting, because once we took that out, that to me was a potential shift in market sentiment. The real shift would have come from that low there, because obviously there was a lot of buying coming in down towards these levels in here. So once that was really broken, I was like, yeah, I like this. I added in like 2 more times. I think I added in somewhere here. Might have even added in somewhere there as well. I can't remember. But I added in 2 more times on this dollar CAD move to the downside. But if you go and then just put on like simple strategy indicators, right? So 50 and a 200 moving average. If you go to the hourly chart, then you can say to yourself, well, I've got all my conditions met, like my why I want to get short, committing the trader reports. My conditions, yes, they're bearish now because we've took out the higher time frame levels of support and resistance. Now let's add a strategy onto it. So you, again, just try and keep them simple. You know, you've got this, I like consolidation breakouts, but you've got like this kind of breakout in here, break and retest. You could have been shorting around this level, 137s. You can see that there are nice little peaks on the stochastic oscillator here. This is why I eventually got short a couple of times, because you're in that sort of band resistance with the moving averages. And then, yeah, the market just continued to trade lower at that point, which is something that I think a lot of people try and focus on strategy rather than why a market's doing what it's doing. But yeah, you know, I missed out on a lot of move there, but I did feel like that was a very good trade. You know, it's probably, again, another, for me, one of my best trades of the year, was short in dollar CAD. So yeah, but it all comes from the weekly chart, right? Thanks, you're welcome. Right, I'm gonna, any more questions, guys? Any more questions? Let me know. If not, I'm going to call it there. We've gone through a lot of data today. Just to kind of round it off with the currency strength meter, because this is something obviously we talk about a lot. You know, if you were looking at sort of your euro kiwi shorts, euro pound shorts this week, you would have done really well. Conditions around kiwi dollar were bullish as well. So I know kiwis had a very strong performing week again. We're seeing a little bit of a rebound now, but why? Because we're up at a very high level of resistance. You know, this was a strong reversal area, so that would have been my targets anyway if I was going to be long in that market. But nothing's broken down here from a sort of 4-hour basis here, right? The market's still fairly bullish. If anything, you've come back into previous highs. Would I want to be long now? I think it's a bit late to, but you know, I'm not saying that it's impossible. You know, it could be a good opportunity to get long again here, but yeah, I mean, I'd be a little bit cautious of it now because of what we're going into towards the end of the week. But yeah, hopefully that made sense anyway, all the stuff that I've talked about. Hopefully it's something that you start thinking about. I know there was a Daniel at the start saying that he'd blown his account. I'm really sorry to hear that, and I'm hoping that, you know, I'm hoping the information that I provide in these streams, or the information that I provide anyway on videos, helps you to understand the markets a little bit more each time. And if it does, and it helps you to progress, then, you know, that's fantastic. I think that's you know, I love hearing about it. So yeah, I'm going to leave it there then, guys. Thank you for everybody that joined, as always. And just to let you know, there's no live streams next week. I'm on holiday next week. I will be uploading a couple of videos here and there, but I'll be on holiday next week, so there won't be no live streams. But thank you to everybody that joined, as usual. I hope you have a successful trading end of your week and going into next week as well. So hopefully that's successful for you. But yeah, stay safe out there. Manage risk appropriately, please, and I will speak to you very, very soon. And yeah, enjoy your weekend as well, guys. You know, if you've had a bad week, don't worry, have a good weekend. Reset for Monday. All right, thanks for watching, guys, and I will speak to you soon. Cheers.